Okay guys, so real quick in this video having to do with this lesson or this blog, how to earn $1,000 monthly without owning any stock. And the whole purpose of this entire website and what I do is to teach people stock options. Now, there is a lot more risk when understanding or when it comes to investing in stock options, but when you understand them and understand how to reduce the risk and play both sides of the market, you'll actually find yourself making more than any traditional financial advisor. Now, the financial advisors do not use stock options primarily because of the risk involved and actually the complexities involved in them. So most of the financial advisors don't actually understand stock options. When you ask yours, ask them how they play on the downside of the market, how they hedge their positions, how they reduce the risk during a bear market, and literally come out and ask them if they mess with stock options. 9 times out of 10, they'll say no. So anyways, how to earn $1,000 monthly without owning stock. I'm going to show you in this video how to do just that. And we're going to take a look at my portfolio, or actually in my account. This is using the TD Ameritrade Thinkorswim. This is the one I use. It's now acquired by Charles Schwab, but they are going to stick with the TD Ameritrade software. But anyways, we're going to take a look at this. I'm specifically in the Boeing stock, the ticker being BA. Okay, BA is the ticker for Boeing, and I'm going to show you 2 different instances or 2 different stocks, compare them, and see which one may better fit your needs, your strategy, and your desires. So, real quick, let's see how we can make $1,000 every month without even owning a stock. The purpose of selling a put option is to hedge down or scale into a position that you're already looking to acquire. So if I was wanting to buy Boeing and at least 100 shares, and I always stress this every time I talk about it, 100 shares is per 1 option contract, or 1 option contract is per 100 shares. That's just how it is. So when I do these positions, I always stress to you either 1 contract, 2 contracts, and then compare it with how many shares it would be. So just remember, a 1 to 100 ratio is what you're dealing with. 1 option contract, 100 shares. The purpose of selling a put is to literally get into a position at a much lower strike price while still picking up a premium. So yes, you're playing as the insurance seller, whereas the person that you're selling this contract to is an insurance buyer. Puts are pretty much like insurance. If I own Boeing, if that was the case, I could buy a 170 contract, a 167, or any of these. If I had got into Boeing just today, right now, at 163.80, I could literally buy this 162.5 contract and have 29 days of safety, which means within 29 days, if this stock drops anywhere down in the 140, 135, or any of these lower numbers, I can let go of my stock at the 162.5. I paid insurance on it. Once that's paid for, it's gone, unless you decide to buy it back and close out the position earlier than 29 days. But let's say the stock drops down to 150. You'll lose your $9.95. And I say $9.95 because this is the buy and this is the sell side. There's always a spread, and that's because of the market makers down on the floor. They make their money between the spreads. So you'll buy the insurance at $1,000, and then this stock will literally, or could, go down all the way. So it's almost, it is pretty much put protection. Okay? Whereas on the other side, we're talking about how to make $1,000 monthly. If you're looking to buy shares and you haven't done so yet, you would, or you could, do this. Now, this is not financial advice, but this is financial education because this is how it works. This is how stock options work. And there's a lot more to it than just buying and selling, but I'm going to literally show you the gist of it all when you're selling options. If you're looking to get into Boeing, why would you buy it at 163? You could just go out and buy 100 shares at 163.95 and it would cost you $16,000, right? Let's do the math. Let's just bring up the calculator. 163.95 times 100 is 16,395. Let's divide that by 100. And guess what? That's the price of now. And this is the strike price that we're going to be messing with. There's not a 163.95, but there is a 152 and 150. And as you can see, these are all available. These are the option expiration dates, but I always look about 30 days because remember, I'm talking about how to make $1,000 a month. If I wanted to sell this 165, there's a little bit of risk. There's a little bit of risk with any of these stock options and when you sell them. What happens is, if I, for instance, let's just go ahead and estimate, I'm looking at this 162.5. I'm willing to go ahead and get into the position, but how do I make money before I even buy? You sell a contract. If I sold this right now, this 162.5, it would bring in $960. $960. So at the end of 29 days, if the stock stays above 162.51, then guess what? I keep the 965 regardless, and I don't have to do anything else. I don't get assigned the shares because the option buyer probably will not put away his stock to me. He will keep them. But what if there's a theoretically, in theory, a crash, right? You crash your car. The insurance company then has to pay out, right? That's the only time that the insurance company will pay you in reverse that you're paying them every month. So if the stock crashes down and you make a claim as a buyer, I still make this money. You still pay me the premium. You still pay your car insurance every month, right? The only difference is now I'm going to take over the asset. So if I sold this contract at $965 for the 162 and it drops down to 162, 162.49, 160, 157, so on and so on, I have to pick it up at 162.5 minus my 965 credit. So really my break even will be, let's do the math, 162.50, picking up 100 shares, right? 16,250, but let's subtract the 965 that we got in cash is 15,285. So what's that mean? How do we do that? Let's divide it by 100. And this is going to give us our break even, 152.85. So here's a good number, and 152.85, this range. So we look on the other side, and I'm not going to get into this yet on how to make money if you get assigned. But for example, I'm just showing you, this is now technically what I picked up this Boeing stock for 152.85 versus 163.70. So this is where financial advisors either do, if they're a little bit more innovative and they're allowed to mess with stock options, or self-directed investors that I continue to take on as clients and students, and anyone who reads my stuff. I teach you how to make money before you even buy. Who doesn't? I don't go out and buy cars left and right without seeing how the market is. You don't go out and buy houses before you research the trends, the locations, and all of that. So before you even buy stock, you need to learn how stock options work, because you're actually losing out on money. No one wants to tell you this because it's like a little insider secret. But here it is right in front of your eyes, guys. I just made $965. Now the risk, like I said, if the stock drops and it gets assigned to me, but now I have an asset. Now I can go on the covered call side and sell covered calls against that. I'm not going to explain to you how, but if you look at any of my other stuff, you're going to find out how to do it. I don't want to confuse you with this one video and this one blog article. So the cost of capital is literally $16,000 or $15,285. The other, when you get in these bigger companies like Google, actually let me show you at Amazon real quick, and let's run the numbers here. And another idea, if you have a favorably big account, 350, 400,000, or so on and so on, you can actually make this in another 29 days and way farther or less of a chance for you getting assigned. And how do we increase our chance of not getting assigned a stock? We go further out of the money on selling puts. We go way down here in the lower ranges. And let's see where 1,000 starts, 955 and 1,000. Let's just do the 1,000. It's at 25.40. That's a huge drop from where it is today. And this is 29 days. But here's the key that I like to tell people. Okay? This is highly important stuff. The 25.40 range, let me just click on this and get it ready. Pop it up. Let me drag this down a little bit if I can. There we go. Okay. We see these Greeks, and I'm not going to make this video too long. I just want to go into some detail. You have delta, gamma, theta, vega, and rho, and I explain what the Greek options are, or the Greeks and stock options mean, and the implied volatility, and so on and so on. This is where the complexities get more than just buying low and selling high, because you have to understand all these other definitions. It has a 44% chance, 45% chance of going plus or minus 340 points before the 29 days. Our odds are even better because that's one, not even down at 25.40, but also our delta is only at a 5 or a -5. Delta is in correlation with probability of being in the money. So that means I have a 5% chance of this thing actually reaching down to 25.40, and if I correlate that with this is only a 45% chance that it may or may go 30 to 40 points. So that's a 60% chance on top of the 5% chance that it may even hit here. It's only given us a 45% chance, almost a 50-50 chance of going plus or negative 340 points. Well, that would be down to 2,900 range, right? 2,950 versus even 25.40, so almost 1,700. No, sorry. Wow. 1,200 points. Well, sorry, 800 points that this thing would have to drop for it to be in this range. So it have to go from 3,300 down to 25.40 for us to be in even kind of risk. Now, I'm not saying it won't happen because Amazon does move a lot. We can see it drop 58 points just a day. So if a 58 point drop every single day, it would be in that range. But let's compare this. Okay, we knew that Boeing, for the cost of capital, was $15,285 to make 1,000. So literally a little under 10% a month. Wow. Versus $250,000. $4,000 profit. I say that because this 2,500, remember I'm timing this by 10, so let's go ahead and buy Amazon, for instance, at 100 shares, and that's not the exact price, but I'm just doing this for an example. It costs us $330,000 for at the 3,300 range. And then we subtract our 1,000 and divide it by 100, and then you get to break even that way. But we're going to pick this thing up at 2,500. So let's go ahead and just subtract 1,000, right? So there's our break even if it just stayed where it's at right now. We're picking this up for the 2,500 mark, so we're making 1,000. So if it drops down to this, actually times 100, sorry, we're messing with a $254,000 position. Subtract 1,000 because we're getting that for credit, divided by 100 is 250.30. So it's literally the next strike price divided by 100. Sorry, already was correct. Right here, 25.30. So it would have to drop another 10 points before we would even lose any money, and we'd still be break even at this point. And this is only a 4 delta. So that's the difference between finding a good stock like Boeing. And I'm not saying it's the greatest stock. Don't get me, don't take this with, just take this with a grain of salt. I'm saying if you was to look at the cost of capital compared to the percentage of what you can make, these are the differences. There's a lot more safety here because Amazon would have to drop much further than, as you could see, Boeing. But at the same time, is it really worth $254,000 to you to make $1,000 a month? You can look at that as in if you're paying cash with to go buy a house, and then you rent it out every month for $1,000 or so, but then you take in toilets, taxes, right? And now your net profit is even less. So there's where I'm always teaching people, treat your stocks like real estate. That's found in my ebook, because you're making more money and better returns with less capital with stock options. So anyways, I hope this helped. How to make $1,000 monthly without ever owning stock. If you have any questions, guys, drop them down in the comments of this article, or find me on Facebook, our Facebook group, and YouTube. Anyways, guys, that's it for this, and I'll see you next time.